Alright, welcome to the channel. I am Sokar. We are working with some financial stuff. At some point, this will become more of a full-time gig for me where I spend a lot of time trading. I've traded before. I've worked in the futures market. I've traded some options. I never really did a whole lot in the way of stock, though, because stock just doesn't pay me enough. Uh, so what we're looking at here on the left is pretty normal candlestick chart. I've got this currently set up to, I think, hourlies. 8:15. Oh, this is a 15-minute chart. Okay. So I've got my account is approved and live. This is Tradovate. Tradovate. I've picked this one because Tradovate has an API. I'm going to start programming an interface and an actual bot. I'm going to program a trading bot in Python, working with Tradovate's API. And Tradovate is specifically a futures platform. So you can't go on here and buy shares of Tesla or Apple, but you can trade futures contracts in this case, it's wheat. This is the March contract. For wheat, there is a December contract, but it's about to expire, so I'm watching the next contract out. Wheat, corn, soy, things of that nature generally trade in quarterly contracts, so they have contracts expiring every 3 months, and this is what we're looking at here. But the point of this video is this over here. This is the depth of market, or the DOM, the DOM. And this is really helpful in different ways in that you can see all of the limit orders. So when you click a button like buy market, this means that I'm going to go long at whatever the current market price is, or wherever the current offer to sell is. If I click sell market, then I'm going to go short at whatever the current market is, or rather wherever the current limit to sell is. So when you have this depth of market, you can see everyone's orders. Now, wheat is relatively slow as far as contracts go, and it's 11:42 a.m. Las Vegas time. So it seems like the market, the regular market, should still be open because I swear it closes at 1 p.m. my time. The futures contracts generally trade 23/6, so everybody knows the 24/7. The futures contracts will normally trade 23 hours a day, but only 6 days a week. They shut down for maintenance on Saturday. So what we can see here is that these people are offering to buy at these prices, and these people want to sell at these prices. So for those who are unfamiliar with the way wheat trades, this is pennies per bushel, and then this over here is a fraction of that. And they've got 2, 4, 6, and then 0. So I think it's quarters, and they're like dropping, except that would be a 7 and that would be a 5. I swear it's a quarter of a penny. For whatever reason, it's being listed as this. So this, the last traded price is right here. This yellow one here. One contract actually traded at this this value. So if I were to enter a market trade, though, I would be entering either at 758 or 754, depending on if I were buying or selling. If I wanted the market to go up or wanted the market to go down. So if someone submits a market order right now, the price would jump up to here. That's some crazy stuff right there. These are Bollinger Bands, and I'm not going to get into the real technical stuff. We're just mostly doing an overview of the DOM, but to rip through the upper Bollinger Band and then drop down through that one, that's crazy. That's some volatility there. I was looking at this. I got it set up when I got off of work. Let's see here. 1 a.m. Right. Actually, it would have been closer to like 1:30-ish. Yeah, right here. No, was it 2:30? Because it was one of these red ones here. That's 4:30. Yeah, it was right there. So I was looking at getting in somewhere in here. No, because I would have got in at 7:42. That's 7 a.m. Oh, 1:30. 145, somewhere right in here. It might have been this one here. I was up until 3 instead of sleeping like a normal person. So right in here is where I was looking at it, and I was thinking that would have been a pretty decent spot to go long. In which case it would have been yay. As of right now, it'd be at 15 cents. But of course, if I were watching this, I got home last night. I looked at the market right in here somewhere. I normally get home around 1 a.m., so it would have been right in this area here. I would have got out of it there. Actually, I think it was 752. Must have been in that one. I don't know. Which would have been about a $500 trade. So not a bad one. That's crazy. When it breaks out of the top of the upper Bollinger Band here, and then it drops back down through, this is a great spot to short. In which case, somewhere around 760 here, because after it breaks out and then comes back down in, so right in this area right here, so around 760 would have been an awesome spot to short, and then just crashes down through this one. As soon as it breaks that, if you're already short, you want to drop your short contract. So that would have gone through at around 746. So 16 cents multiplied by $50 is Merry Christmas. That's quite a move right there. And then, of course, because it dropped out and then here it went back up, you wanted to get into the market in here. So you probably would have picked up 746, 747, somewhere right in there. And then anywhere up in here, like you just ride that all the way up. When you end up with this candlestick right here where it's opens here and drops way, probably would have exited the trade somewhere in here. And then I would have been sad because it would have come back up to close right there. But you know, you want to take your profit when you got it. So back to the DOM. Sorry, I do this rabbit trail thing. So depth of market looks like this. The last traded price, and so the listed price is 757.6. That's this right here. That's the last traded price for the March contract. That's what the H3 is. The 3 means next year, and the H is March for wheat. That's the last traded price. So we have currently 8 people, or one person with 8 contracts, or four people too. This is the total number of contracts. We have 8 contracts that are trying to be sold. I'm sorry, they're trying to buy it at 758.2. The last traded price, you've got 29 contracts of people trying to buy it here. Then of course you have these little the green spots here show you how big it is. And if you look here, 755.6, nobody's interested in buying it at that price. You got 20 people at 756. You got one person down here at the 755.4, one here, 6 here, 6 here. Apparently people like the round number. 755 cents per bushel, 754 cents per bushel, that's 754. And then of course the contracts each cover 5,000 bushels. So when this moves 1 penny in your favor, so if you're long the market, it goes from 755 up to 756. That's 1 penny, but it's 1 penny per bushel. And so that's a $50 move. So your individual tick size here, because that's a quarter, anytime the tick goes 1 with you or against you, you are either making or losing $12.50, which is why I say stocks don't pay me enough. So you got these people on the selling side. This guy wants to sell it 758.4. You got 34 contracts here at 759. So 759 here is a pretty solid spot. In order for the price of wheat to come up above, from where it's at now, 757.6, in order for the price to go above 759, you need to have all of these orders here filled. So somebody puts in a buy market, I click buy market right now, it's immediately going to drop this number from 10 to 9. The yellow part here will bump up to here because I will have bought one of these contracts that they're offering to sell at that price. So in order to get the price above this, we would have to have 67 market orders placed to buy. It would fill all 10 of these, and then 23 of these, and then 34 of those, and then it would go from there. So the depth of market is really nice because this chart over here shows you all of the history. This is what happened at 9:30 p.m. Last night on December 14th. This is the history, and this is where most people do their trading. I do a lot of my trading here. I'm a very technical guy. I've got a head for numbers and such. So the more you watch my financial stuff, the more you'll see this, and we'll talk about the different things that I like to trade in other videos. But this is not history. This is present. This is current activity, except either because the contract is just so small and nobody cares, or I mean, I don't think it's down for maintenance. Is it? I think the hour of maintenance is at 4 p.m. Eastern time, so maybe not. I don't know. For whatever reason, these numbers aren't moving right now. And of course, we could switch this over to the ES, which is the S&P 500, singly the most popular contract traded ever. Uh, and then we can see if it was moving or not. But for what we're explaining now, this is good. So when you see these bars here, you can see that a lot of orders are sitting here. You can see there's another little bump right here. In order to get the price to go down, the bears, the people who are trying to sell the market, have to make it past these little hurdles right here. So you can see where current support is. Support is the trend line at the bottom that the price tends to bounce up and down on. Can I draw lines on this? No, that just drags. We're gonna have to do a little more exploring. I think there is a way to draw lines though. Indicators, there might be some in here. Ooh, look at that. I'm gonna explore some of that when we're not on camera so that I can explain. Oh, there we go, drawing tools. Let's make a line. Okay, so just for fun, an example of a trend line might be the bottom of this. Oh, click. Why? Oh, there it is. And then like this. So that would be a potential example of a support line. Um, it's going across the bottoms of these things here. So in theory, the idea is it bounces off this line. It goes up, it comes back down, it hits the line, and then it goes back up, and it comes back down, and it hits the line again. That's the support line. And then when it breaks through, there tends to be a longer drive down. And of course, the longer it goes above the line, and then I got to remember what it is I'm trying to say here. The faster it breaks through the line in general, the more likely it is to continue down. This is some wild stuff. It's super crazy. Oh, look, it happened here again too at both ends of the Bollinger Bands right there. That's awesome. And here, so that's some that's a lot of volatility going on with wheat right now. At any rate, that's an example of support. But over here, you can see the support because you've got the a lot of orders, limit orders right here, right now, and then this could potentially be another support. We don't care about that line anymore. Let's get rid of it. Click delete. Yay. And of course, that was definitely not a technical line. I mean, I just threw it up there because it looked good. There are rules and stuff to making good lines that will actually help you. And this is just a 15-minute chart. If you wanted to see the longer trend, you would want to switch over to a daily chart and stuff. And then, of course, on your upside, your resistance is going to be this spot right here, 759, because that's where most of your orders are. The limit orders to sell are right here. You will have to break through this resistance for the price to go up any higher, and you're going to have to get through this support. Again, it's a kind of resistance. Support just means resistance on the bottom side in order to get the price lower. So let's switch this over and see if we can see some of this moving around. So as people hit market order, when they're buying or when they're selling, this here will move. It'll move up and down to reflect the current price. And this moving up and down is what causes these candlesticks over here. So let's take a look at, let's add another one. I want the ES. This one here is December. Oh, it's also quarterly. That's interesting. We're gonna go with March again, just because December is gonna close out here in like a week. Okay, so this one is moving. You can see all the numbers are changing. So here's the last traded. Now the price just bumped up, and if we switch over and add the ES over here. Select. There we go. So you can see this candle forming right here. That candle forming is this happening here. So as this goes up and down, you can see the candle going up and down. So this is where you can see all the stuff happening. That there 207, it just dropped. So a bunch of people, 100 contracts just canceled, and it looked like they moved it up to here. So these are the people who are trying to sell. Uh, and then you see now it's back up to 200 again. So you can see live what's happening right now, where all the orders are. So your resistance on the upside is going to be right here in this area here, because you got a decent chunk of limit orders right here. So for the price to go above that, every one of those has to be bought by someone willing to buy at market value. And down here, wow, that's pretty skinny all the way down, except for right here. This one chunk right here. This is going to be your primary. Oh, they just moved it up here. That's your big spot of support down here. In order for the price to drop lower, it needs to get through this point right here. So when you're looking at a DOM and you're trying to decide. Short term, especially for scalpers, people that jump in and jump back out in 12 seconds or a minute or 3 minutes, in order to just claim 1 or 2 points, get $50 or $100. That's one of the things that they're watching for. They're watching for this point here. And they just solidified it 39.27 there, because these orders bounced up to join them, and now half of them dropped back down here. So now this is your point, and it's actually coming down pretty quick to find it. Oh, it dropped lower. So right now is probably a good time to be shorting. But if you're going to be scalping as this moves down, you hurry up and short the market, and then after it drops just a couple of points, just close your trade. You got this spot here, exit all at market. CXL, I guess, means close. I'm gonna have to look into that so I can sound smart when I'm talking about stuff. But this support down here, it just keeps moving down. So right now is probably a good time to stay short. And you can see this candle is just getting more red. And the S&P 500, at least the E-mini S&P 500, this trades, I'm pretty sure, at $50 a point. Meaning when it goes from 39.24 down to 39.23, so those 4 ticks right there, that's $50. So every tick, every one of these, every time you see this drop one spot, if you're shorting the market, it's moving with you. You're making $12.50 per point. So I'm sorry, per tick. It's $50 per point, $12.50 per tick. So if you're watching this and you see your resistance here moving down, and you see the support level here moving down, it's probably a good indicator that the market is going down. And that's why we have this red candle here. I wouldn't necessarily be shorting it right now, at least looking at this longer chart, but that's the DOM, the depth of market, or the order book in action. This is what it looks like. This is why I love this tool. And of course, I'll be spending more time in it, and I'm going to watch a couple of the markets as they move, like this one. And this is the most liquid market. You have millions of people in here watching the market. Most of them are over here. Not so many people watch the DOM. But you have people in here watching these candlesticks. I'm in a 15-minute candlestick. A lot of traders are in the 1 minute and the 5 minute. They watch the 1 minute so they can try to time exactly when they're going to get in to either short the market or go long. And then they have their 5 minute or their 15-minute, like this one, to verify all the things that they watch for, to decide when the market's turning around. So let's watch this guy here. I think it's time to be going long again. So your primary bump here, that one moved up. This is the big support, but that one moved up. This here is moving up a little bit. So it's bouncing around a little, but I think it might be a good time to stay long. If so, I just lost $25. Now I'm only down $12.50. Now I'm breaking even. Now I'm up 12. Now I'm down. Now I'm up. This is thoroughly exciting. All they need is some blinky lights and waitresses with lots of cleavage showing to bring around margaritas, and we'd be in Vegas. Oh, I am in Vegas. Even better. I'm up 50. I'm up 70. Oh, no. Right. Let's see. 50 per point. Right there is being up 50. So now I'm back down to almost breaking even. on where I said it was probably a good time to go long. So I'm up a little bit right now. Right there, it'd be 62.50, $50. And if I were scalping, if I were getting in this and just trying to make short predictions, I'd close out right there. I'd take my $50. So when I said that short was probably a good idea, it seems like I probably could have got 50 or 100 dollars on that one, and then switch position right here. If I were still long in it, I'd be up. Let's see, 50, 62, 50 right now, and then up whatever 12.50 to that is, and now I'm back down again. So realistically, if I were watching this and trying to do the scalping, I just close out my position right in here somewhere, claim the $50, and wait for the new trend to establish itself. But we're primarily in this little range right here. Our support just moved down a little bit, moved down again, dropped down, and then came up there. So you've got a fairly large. So now it's time to be shorting it again. Because this is coming down. These are coming down as well. So there's a couple of market movers here, meaning you'll see 100 of these contracts move at a time. Like this here, it was just at 80, and so when it just moved down here, so it dropped from 181, it dropped down to 80. So you've got 100 contracts at a time moving around right here. So you've got a big market mover who's trying to buy here, and as this moves down, the market needs to be coming short. So when I said flip around short, it was 22.50. So again, I would be up around $50. Now I'm not. Now it's 25. Now I'm almost breaking even, 25. I should be paper trading this. Your paper trade account at Tradovate is only good for 2 weeks, and I created the account a while ago. It was probably 2 weeks ago, so I might not even see. Now I'm in the red. Now I'm losing money because I'm talking instead of trying to exit the market. So I might not have paper trading, but I haven't clicked on the paper trading. So maybe I do. Maybe I have to click on it to be able to activate that. But it would be really fun to sit here and just guess where everything's going, because I haven't traded the depth of market live before. I have used it to determine where things were going. The last time I was in the market trading futures, we were trading some of the S&P 500. Mostly it was the Dow Jones, and it was in March of 2020, which everybody will probably remember forever as being COVID. Everybody was losing money. I made a lot of money. I took $2,000, I turned it into 28 grand. Actually peaked at 31,000, but closed it out at 28, and that was in a month. It was really cool, but that's some really awesome returns even for me. I do really well when I'm in the market, but that was straight up insanity is what that was. So this is a real brief overview of the depth of market. Hopefully at this point you have at least an idea of what it might look like. You got your big bar here, that's your primary resistance. You got your big bar right here, that's your primary support. And then, of course, the farther down it goes, the more hopeful people are. Down here, you've got no contracts. Nobody's trying to buy down here because they don't believe that it's going to drop that low. At least at the moment, they don't. And then again, up here, you got all these sellers, but nobody's trying desperately to sell something right here because it's not going to get there anytime soon. As you can see, though, they're starting to creep their way up, because they see this candle turning around here, and they're thinking, ooh, it's a long term, which honestly, in the longer than 12 seconds scheme of things right now, I'd probably be going long too. Pick up a long contract just now, and then ride it for a few hours, or well, no, it would only be a few hours. In order to carry your contract overnight, you've got to have like $5,000 or $11,000 in your account. Whereas day trading, you only need like 500. So if I were looking more long term, I'd probably be long right now and just ride it out until it was time to go to work in 3.5 hours, and then close my position and go to work. But trying to do the scalping thing where I'm watching it for the next 10, 12 seconds, where would I be right now? since I'm just now paying attention, I'm watching this, I'm watching these, and I'm seeing where they're going. And right now we're just kind of bouncing up. There we go. That one went down, that one went down. So right now is a good short. So we'll just pretend like I got in right here. And now it goes immediately against me. Bam, I just lost 50 bucks, 75. So, yeah, this is going to be exciting. We'll do some more videos on this later as I learn the process better. The primary reason for doing this is that in teaching something, you learn it more effectively. And the secondary reason, of course, is that I have some friends who are interested in trading, and I've been talking to them about it. And now we have a video that we can watch. So we will call the video good here for now, and we'll be back with more. And as I get more into this, as I'm able to devote more time to this, I'm actually going to take the financial and spin it off into a different channel. Because you don't want to have a whole bunch of Minecraft stuff and a whole bunch of financial stuff in the same channel. Because yeah, that'd be a little confusing. Wow, look at that go up. So my more long-term position of going long right in there, yeah, that's definitely good. It's paying off right now. Ooh, that'd be about 500 at the moment. But anyway, obviously I'm not in the market. My account is approved but not funded. This is how much money I have right now. My equity right there. So definitely nothing in there yet. I will for sure be paper trading at some point. And then of course, as I start programming my bot, I'll put some videos up for that too, so that people can see how that's done as well. It's going to be a lot of fun. I'm looking forward to this whole process, and hopefully you'll stick with me through it. We'll work on things and learn things together, and maybe even make a little money. It'll be awesome.